Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello and welcome to the Weekend Investing Daily Bytes. We are shooting this episode on 5th of June. The markets have continued to be at a good rhythm on buoyant buying by domestic as well as foreign institutions. There were some hiccups a few days ago, but the market has, although it is not sprinting up, but it is not giving up the gains also. Today also, the Nifty opened with a nice gap up, but kind of stayed stagnant during the entire day. She's still closing, well above the previous close in terms of the level 18600 is not too far from 18800 odd, which is the previous all-time high closing, so less than 1.5% away. So some jitters of, just like most cricketers have jitters in their 90s just before they hit their century. I think the market also is having some jitters before it makes a new high, but it does seem to be going that way. Nifty heat map, very interestingly, auto numbers for May are robust across all sections of the auto sector. So we saw good gains in Maruti, Tata Motors, Mahindra, uh, and even two-wheelers numbers were all right. Steel and cement stocks were doing well. Infra stocks like L&T was doing well. Some sell-off today in FMCG, Hindustan Levers, ITC, Nestle, all seeing some red here. Uh, IT was largely flat. Banking almost flat, except Axis Bank, which was up 2.67%. So no surprise as such on the downside. Reliance, of course, renewing its upward move at 0.9%. There you see, in terms of the sectoral overview, autos doing 1.3% up today, and over the last 1 month they have gained 9.2%, just behind real estate at 10.7%. So these two sectors have been the most promising ones over the last 1 month, and even over 3 months if we see, real estate has done 19.6% versus 14% for the autos, doing brilliantly. And over the last 12 months, autos has done 29% and real estate has done 21%. Both sectors doing quite well. What was lagging or sulking today was FMCG, PSU banks, and IT. All three sections in red. But other than that, pharma, metals, public sector enterprise, uh, infra stocks, commodity stocks doing quite all right for the day. Mid cap stocks, although not able to hold on to intraday gains, but still is making gradual gains upwards. So this is a nice breakout that has happened. We are now at 34,000 immediately from 29,000. So nice jump of 15% has come in mid caps. Small cap index also has gained almost on a daily basis, with the index gaining from 8,500 in April to 10,071 now. So it is going towards its recent year and a half high, although it is already at a 52-week high, but we still have some way to go for an all-time high, which is a bit higher than this, which came in 2021, I think. Bank Nifty, yet another attempt to cross this level, and it did that intraday, but by the end of the day, it gave back most of the gains, yet still closing above the previous close. So promising, yet not uh, very enthusiastic right now. Nifty Auto, as I mentioned, is a extremely bullish sector right now. We can see that how it has, after several years of consolidation and after the COVID fall, it has come back dramatically from 4,500 to 10,400 and 14,570 now. So it's almost more than tripled, almost near 4.5 times, uh, 3.5 times, and going very strong after taking this bounce. If you see the structure, it's sort of a cup and handle structure where the breakout happened at 12,000 and then it remained in this 12 to 13,000 range, and it retested this breakout range, and in fact even whiplashed some of the bulls here into believing that it's breaking down, and then it has suddenly gone up like a rocket. So this is a very common pattern. Sometimes you will see in stocks and indices that to trip the the last bulls that may be remaining, the market will come down to a level where some stops will go off, and then it goes off again. And another example of that is Mazgaon Dock. This stock, of course, has been rallying last few years a lot, but since December 22, it had gone into a corrective mode, consolidated here, made a sort of a inverse and head and shoulders pattern, and then as it was breaking out, it gave a breakdown and nipped this bottom of this pivot here, and probably a lot of folks got out here, and then just see how it has rocketed up. So this is a very typical shake off move that happens in all time frames. I mean, this will happen a lot within intraday also, daily, weekly, monthly time frame. In all time frames, you will see this move happening. So one should be, if one is playing by the charts, one should be careful about it. That in case the shake off happens and stock starts to move back up, then you need to take that position again with a new stop. That sometimes people say that no, I've got a stop loss now. I will never touch this stop again. So don't get so emotionally biased against any stock. I mean, this happen all the time. So that is not really a cause of concern. Today's discussion is about how India is looking very bright ahead as per several reports, most recent ones being from the Morgan Stanley house, and we will showcase some of the data points there. Although we practice momentum investing, and we don't really look at forecasts or predictions for selecting our stocks, but nevertheless, to have confidence that you are in a growth market, it is always good to eyeball these fundamental numbers, and so that it will give you confidence about that your momentum investing, whatever you're doing, and the stocks that you're picking will seem to be on the right path. So, some of the reforms that we've had in the last, 8 9 years. One of the biggest one was in the corporate tax rate cut. What that does is that earlier the corporate tax rate was somewhere near, with all surcharges, between 33 and 35%, and that causes less and less money in the left in the hands of the corporate to reinvest, to have that capital recirculate, to even pay their stakeholders if they were giving out dividends. By bringing that down to 25%, and in some cases even to 15%, uh, the government leaves a lot of ammunition in the hand of corporates. So, and corporates are the ones who will sort of lead the path in terms of credit creation and deployment of credit for new capacities, etc. So if corporates have more left in their hand, we can expect more and more faster and faster capacity creation, and that is probably what is happening over a period of time. And compared to a lot of other countries, India's corporate tax rate, even at 25%, is very much in line with a lot of other countries. So earlier, we were sort of standing outside this comparative chart at 30, 35, 33, 35%, but now we are very much within the range. Of course, on individual front, I think that reform remains pending, where my personal belief is that the day government is able to bring down the individual highest tax slab rate, which they have gone from 42 to 39, from 39 to maybe somewhere close to 29, 30, and the existing next slab rate from 30 to maybe somewhere around 20. I think that will unleash a different level of consumer spending, and a different level of feeling of well-being, a feeling of wanting to pay individual tax. I think the formalization of the economy also will go very fast, but that for some reason this government has not so far been able to do that. I think they have very strong tax revenues now, and he should be able to do it, but that's just a personal perspective that I have. Infrastructure has picked up a lot in the last 8 9 years. I don't want you to see this as a report card of the Modi government or something. I'm just quoting from Morgan Stanley report. So I mean, it's just obvious that if you just look around, if you have been outside on any highway, if you've traveled outside, you are seeing the kind of infra push that we have not seen for a long time. At least I can tell you, in 53 years of my life, I have not seen this kind of a concentrated push in any 5 7 year period, and I've seen quite a bit of years, more than a lot of users probably. So I mean, if whether you look at national highways, whether you look at renewable energy, whether you look at railway, electrified routes, uh, broadband subscribers, and of course private sector has helped a lot. Geo and all those players have really helped a lot there. GST collections, very healthy trend. The formalization of economy actually is going to help a lot, and that hockey curve kickoff will happen, I think, in the next decade. This dividends from this formalization of economy, like people, a lot of people say that demonetization was a total waste, it was a failure, uh, and one can debate that, but my own personal sense is that whatever failure it had in terms of causing distress to the people, that apart, it created a different mindset that if you're doing business outside the economy unaccounted, you need to formalize it, you need to formalize it gradually. I think that has really helped, and it has given its huge ramifications in terms of the money that has come into the stock markets. Never before in the last 25 years, 27 years that I've been seeing, was this kind of domestic flow available, which could counter any kind of foreign outflows. But that is available today because the economy has formalized in a large way, and doing more so as we go along. Digital transactions, of course, are going up dramatically. I think we are at the forefront of digital payment technology across the world, and that will surely give a lot of dividends in the coming decades. Insolvency and bankruptcy code has also helped. I mean, we don't hear of large NPAs at banking level. The NPA books of the bank, the public sector banks, have, they say, have never been more healthier than what they are now. And whatever phone banking or whatever that was happening in the previous decade, that all that cleanup has happened, and a lot of credit creation can happen now. Inflation, just look at the rest of the world, what is happening. I think our inflation policies, the reserve bank policies, have been extremely mature. uh, uh, just look around our own country, all our neighbors are in tremendous trouble. I mean, we must be doing something right, that we have a ship where we are posting the highest growth rate across the world. We have the most stable sort of you know inflation range that we've seen. So extremely good numbers. Kind of decoupling of the Fed and RBI cycle is also, you can see how now the RBI is actually, like they're going to meet on June 8th. I think they're going to remain, no change in the rate policy, but they are probably a step ahead now, uh, versus the Fed, and the decoupling more and more will happen, and US may, have its own troubles, but of course the impact of that is here. But I think we are in a very good position on that. Real estate has been doing quite well. I have myself been posting a lot of uh, on ground anecdotal evidence from the region I belong to, and we are seeing a phenomenal growth in real estate, and that's also evident in the real estate stock prices, real estate index, and new sales of units, new launches, etc. So I think real estate in any economy is a very large chunk of what makes the economy do well, whether it is the US, whether it is India. I think real estate doing well, provides a lot of opportunity, trickle down impact, to employment, to all kinds of industry, autos as well as real estate, and of course the foreign direct investment, which was already on a good path before this decade also, has continued to do so. Um, so there is no real reason why India will not remain increasingly, you can say, preferred location for a lot of international manufacturing companies, and we are seeing the Apples of the world wanting to increase more and more the capacities in India. For some reason, the global autos majors have not been able to really get a foothold here yet, but I think that industry is also going to explode now. Domestic flows, as I already mentioned, if you just see the average domestic flows, I mean, they are going into that exponential, although they are going volatile up and down, but that exponential rise is coming. The SIP flows are constantly going up. Extremely good, I think, signals for uh, anybody to not have doubts that we have a great runway in India. We have sort of a given growth rate for next decade or two, unless something messes up in terms of who we choose to be at the helm of the affairs. And I hope 2024 will remain, with the strong governance that we have today. But nevertheless, in tomorrow's episode, we will see impact of all this on stock markets. And this is the end of this episode. Thank you so much for watching. Do like and subscribe to us if you like this content, and we'll see you tomorrow. Thank you. Bye.